A sense of capital. Okay guys, we are live. Aloha lads and gents. Welcome back to a new episode of A Sense of Capital live earnings. Actually, it's the last earnings live stream for the season for Q2 2024 from my side, because today we will cover the sixth and last company I'm invested at this earning. So it's closed this season. I'm kind of happy about it, because it's always a part of stressful, even though it's exciting when we talk about backing companies live, when we thinking about, okay, what will be the outcome of their results of the whole quarter, of the past 3 months of activity and action, and try to perform in a very good manner. On the other side, yes, I mean, then life will be a little bit more boring, let's say it like this, without these results. But however, I mean, I'm invested as well in Hims and Hers, and you can see what kind of action is going on today because of Eli Lilly news, Pfizer news. So I guess I will not run out of action, and I will not be boring or bored that heavily that soon. However, guys, before we jump in, a quick disclaimer, and before we brief a little bit, talk a little bit about the cybersecurity vendor out of the US, SentinelOne, I quickly want to address, as always, a quick disclaimer to you guys that in the upcoming minutes that will not be financial advice, consultation whatsoever, and of course, as always, there's no guarantee for correctness of the provided data. So always make sure, please guys, that you take care of your own due diligence process, of your own research. Make sure that you make your decision on your own expectations, and you're not connecting too heavily on what I'm communicating here in the upcoming minutes. Okay, guys. So I guess now it's 9:40 p.m. in the evening in Germany, in Leipzig. Actually, I'm located currently on vacation in Denmark, but here actually it's exactly the same time. In the US, it's currently 3:40 p.m., so a little bit earlier as well, Tuesday. And I guess the results will be live in roughly, let's say, earliest 20 minutes, but I think more likely it's in 30 minutes the results will be live. So we have 30 minutes roughly left to discuss a little bit the company, their product portfolio, the past earnings results, the news. Yeah, so I guess those of you who are new about it and new to the company, everything will be quite new to it. Actually, for me, it was as well quite kind of a struggle to brief myself, introduce myself to the company, doing research. So I try to develop myself as well in the future and improve. However, we need to start somehow, and today it's the first stream in this regard. Yeah, and as you can see here in the back, this couch, this sofa, I was actually, let's say until 20 minutes ago, I did a very intense power nap on it. Maybe I did a too strong one, because I already feel honestly a little bit dizzy. However, we will somehow manage it together. Okay, guys, let me share my screen to get a little bit, or go a little bit deeper into the company SentinelOne itself and what they are doing. So, hope you can see it right now. Let me figure it out. Yeah, looks good. So here we are right on the website of SentinelOne. And who is SentinelOne? You can see on the first glance when you put your cursor on top of platform, you can see that they are an endpoint security, first and foremost endpoint security, cloud security and identity security provider. But as well, they provide solutions in terms of data processing and of course AI. But you need to know, they already mentioned this buzzword AI quarters and quarters ago, basically at least since they IPO'd. So it's not that they just jump into this boat of AI and promoting and try to ride it and ride this wave of AI success, since players like NVIDIA are present over there. No, SentinelOne is really defining themselves as an AI-driven company. However, So you need to know, I mean, those three major security pillars, endpoint, cloud, identity security, they are different sub-pillars, let's say like this, and sub-functionalities. A lot of different kind of vocabulary. And for me as well, as a not cybersecurity expert, it's sometimes a little bit difficult to head through it and really understand all the relations between it. And I can tell you right now already, so you're not blaming me later on, I will never be and become in my life a cybersecurity expert, let's say at a chance of 99% plus. Yeah. So I try to explain it as a non-professional as far as I can, and at the end I just need to trust about their numbers. I mean, yes, I'm reading sometimes when cybersecurity experts reach out to each other through Reddit, for instance, or through other boards, and they're asking, oh, what's better? Is Palo Alto better than Crowdstrike? Is Crowdstrike better than SENTINELONE? So different kind of vendors in the cybersecurity space. And I get a superficial idea where the strengths and the weaknesses are located of this kind of companies, but I will never be a true expert when we talk about this. Yeah. But however, I don't think, I mean, it's always better if you are, but realistically, I guess if you are not really internally involved into the processes, even if it's a very simple, basic product, let's say like this, like even a business where you think, oh, it's easy, like Starbucks or whatsoever, you will never understand really or truly the details. And in SENTINELONE, it's definitely the case for me as well. However, we can always try to do our best to understand it, at least on a superficial scale. Before we talk about the detailed services and products, we will jump quickly and cover the stock itself, a few KPIs. Yeah. The stock price, the recent quarterly results, and then we go deeper and dig a little bit about really what means endpoint security, what means cloud security, what means identity security. Yeah? So you can see here the stock of price history, and you can see it's more or less quite unstable during the past 1 year. You can see it's 50% up actually, so developing quite well, and year to date it's minus 10%. Yeah, so it boomed a little bit till February, and then it dropped, and actually till the last earnings results release, so till Q1 2024, you can see it here, May, end of May, it dropped heavily. There are different reasons for it. One of it, actually, they adjusted their guidance, yeah, the revenue guidance by less than 1%. But the result of it was, as you can see here, that on the day after it dropped, I think, roughly 20%, just based on a less than 1% full year revenue guidance. Yeah. Then the gross margin was actually at the same time increased, non-GAAP gross margin expectation for full year from 78 to 79%, but I guess that wasn't considered at all, because you can see this kind of drop, which looks like a waterfall here. But another big aspect for this drop, honestly, was that in this period of time, in this quite close time frame, other software companies, especially SaaS companies, software as a service companies, released their results. Like for instance, Salesforce, disappointed kind of. The expectations have been very high. And I guess the analysts and investors have been very strict about the expectations, and somehow they missed it. And so not only Salesforce, not only SENTINELONE stumbled a little bit and experienced a little bit headwind, but other software companies as well. And somehow because of this, in this short period of time actually, SENTINELONE dropped roughly 20%, even though the results from my perspective wasn't that bad. On the other hand, that was for me a big chance to invest in it, because I invested roughly at the $17 mark at the day after, right, directly after the day after, and I invested roughly 11,000 US dollars, and so now I'm quite up with roughly 40%, and overall I have a position with 16,000 US dollars. So from all of my 6 companies I'm invested in, this is my 4th favorite company. Yeah? And you can see that this investment platform, Seeking Alpha, is rating it on a quite good level, no matter if you talk about the SA analyst rating, so these investors who are registered to this platform and rating the company, it's quite bullish. If we talk about Wall Street rating and as well a fundamental rating, it looks quite well. You can see here the overall revenue development. In the past, we reached developments of more than 100% year on year, and then full year revenue, year-on-year growth decreased, and you can see it here now. The expectations are not that high anymore. However, there are definitely some potential drivers for it. We will talk about it in a moment. And you can see here as well that even on a non-GAAP base, in terms of this company, it's definitely not a profitable one. Yeah, so investors need to stay more patient when we talk about really squeezing out money, cash, liquidity, and of course margin and profit out of this business case, let's say it like this. But yes, I mean, if you are invested in this company, like me at least, I guess you are invested because you set your focus on revenue growth, you set your focus on more risky bets. And I think here when we talk about SENTINELONE, you are completely right. Talking about the capital structure, okay, how large is the size of this company? You can see market cap is roughly at $7.8 billion. And when we deduct the cash position, which is a quite strong one with roughly $770 million, an enterprise value of $7 billion is left. That is the size of a company we are talking about. So many players out there, at least which are stated as well as a public traded stock, have way larger enterprise value. No matter if we talk about Crowdstrike, Palo Alto, yeah, these kind of companies, Fortinet, a lot of them are priced way higher. Yeah, so that is how it looks. Let's talk a little bit about the and quickly focus the latest earnings results. So let's see, roughly the last 10 to 51. I zoom a little bit in, so not getting any problems with your eye functionality in the future. And give me one more zip. It's still comparatively small, but I guess it's working out. And you can see on the first glance here EPS, so the profit side and the revenue side forecasts by the analysts, that the green color, it always shows you that they are quite reliable in terms of their forecasts, in terms of the expectations, the guidance of the company, the guidance and the expectations by the analysts, and how they cover it. Yeah, so if they guide a revenue or an EPS expectation, most of the time they cover it, and they cover it quite well, even though they are not a heavy sandbagging company, so they are not putting their targets that low, so they already jump very easily over this hurdle, yeah, this barrier. That is not this kind of company. So you can see it's always about a few millions in terms of revenue up, revenue and forecast, and the same when we talk about EPS. However, they had a miss one year and 1 quarter ago, in June actually, and that was actually the reason when I sold my last investment in SENTINELONE. I was already invested in this till this point in time, so till Q1 2023 earnings, and after those earnings, right after the next day I sold my position. I sold roughly $5,500, so it was way smaller. I sold it with a loss actually, 25% loss. And yeah, I waited for it, very patient to reinvest into the stock. I always backed it, checked the news, yeah, followed it on websites like Seeking Alpha, and yeah, was quite surprised that it dropped that heavily one more time 1 quarter ago. And since then, I'm invested in it again. And so now we focus a little bit the stock itself, the price, because I guess at least all we share the same background as investor or potential investors. So now we will take care of getting a little bit deeper into why cybersecurity. What is the purpose of it? What are the products? What is the competition? What are the current or the latest developments on the markets? Yeah. So therefore, I'm sharing you one time this kind of news. It's not the biggest one. It's by far not the biggest one which took place in the past. But it's just a great example what you can see here, which was displayed and shared on YouTube by PBS NewsHour, a news channel out of the US 2 months ago. And you can see cyber attack, this is the headline, cyber attack on software company disrupts business at thousands of car dealerships. Yeah? And here in the commentary or in the description of the video below, thousands of car dealers across North America have been forced to revert to pen and paper after a software company they rely on was hit by several cyber attacks. The outage has not only caused delays and inconvenience for customers, but has also raised major concerns about whether sensitive data was compromised. Yeah? So you can see really a company who took care of them, maybe with as a cloud provider, for instance. I'm not sure who it was, what was really the company who was attacked by. Yeah? But I mean, this kind of larger or smaller, comparatively smaller cyber attacks can make sure that clinics, doctor shops, universities, private companies, you can see here the car dealerships getting switched off in terms of their regular business activity from 1 minute to another. People can't use anymore their technical devices, and maybe they get an email, look guys, if you don't transfer this amount of bitcoins or whatsoever to this address, then until this point in time we somehow delete all your whatever patient's data as a doctor shop, for instance. This kind of stuff happens in Germany quite often actually, and you can see it here this time. Car dealers have been confronted with the situation. To avoid this kind of unfortunate situations, of course, you go to companies like SENTINELONE, who provide those protective solutions, as you can see here one more time, endpoint, cloud security, identity solutions. So maybe we go through the product line of SENTINELONE by covering the headlines of the past years. And you can see here that's the oldest one, 18th February of 2020. SENTINELONE unveils Singularity, the platform to defeat every attack every second of every day. So the first vocabulary when you are new to the company is Singularity. And Singularity is really basically the platform to manage SENTINELONE solutions. Yeah? Where all different kind of solutions come together and customers get access to, and there are different, let's say, like modules, yeah, different kind of add-ons to their standard basic portfolio, product portfolio, which you can choose as to go for and select as a customer for to protect different kind of directions. And the really legacy business is actually EDR, and that is endpoint detection. So EDR stands for endpoint detection and response. So that's the classic stuff, the classic solution when you want to tell it like this. Wait, share it one more time here, endpoint, and that's the bread and butter business. And what means EDR? EDR basically means that the network as well as connected devices are protected with the focus on endpoints of it, yeah. So the software installed on devices, for instance, yeah, different kind of let's say a notebook or whatever, Windows device, all of this kind of stuff can get protected by EDR, yeah. So that's really the fundament of the business. That's the core business. And here you need to know that Crowdstrike and Microsoft with Microsoft Defender are the major competitors. When we talk about the CAGR, so the compound annual growth rate, you can see it in this business. One more time, endpoint detection and response. The growth rate in the US, just in the US, we've just focused right now on the US, is roughly 25%, expected 25% per year till 2030. So even though it's the old bread and butter business from SENTINELONE, it's for sure not a slow one, a slowing one. It's still increasing, still so much room for improvement. A lot of customers, a lot of companies, organizations, governmental ones whatsoever, are not covered by cybersecurity business and solutions right now. So that's still existing. And then when you check out EDR, EDR is not enough. If you know here at EDR, it will be not enough, because you can see here there's XDR, and then there's even MDR. Let me see if I can see it. But we will talk about this in a minute. And I want just quickly let you know what is the difference between EDR, XDR, and MDR. And so basically, EDR, as I mentioned, is this classic business, endpoint detection and response business, yeah, covering devices and the network. XDR means extended detection and response, yeah. So it's a little bit like EDR 2.0, which sets a higher focus within the actual network itself and covers as well cloud, part of cloud, websites, for instance. This is covered as well. And then there's MDR. And MDR, I will show you a news post in a moment, that is managed detection and response. So we have endpoint detection and response, then we have extended detection and response, which is EDR 2.0, and then we have MDR, which is managed detection and response. And managed detection and response means that's more than a product, it's actually a service which combines, can you see my dog in the back? A little bit, huh? There it is, the head. Oh, I'm very sorry for the dog. You can see it here on the side, that there she is. Now she's getting famous, but I hope she can somehow sleep, even though I'm doing the stream. However, she already slept the full day, not that bad. However, so MDR, going back to the topic, MDR is the most sophisticated version, and it's basically a service based on MDR, on EDR and XDR, and it's a lot of data and details and information getting created by these EDR and XDR security software functionalities. And MDR is this kind of service which is managing this enormous flood of information. Yeah. So the result of it is that even though you have very sophisticated EDR and XDR, you're getting a lot of information, you screen it, I mean, make sure everything is secure. The result of it is not that you need to achieve or create a complete department of new cybersecurity analysts and you need to pay a lot of money as a company. No, with this MDR you source it kind of out, and the company, the cybersecurity vendor like SENTINELONE is providing the service to manage this big flow of information basically. Yeah, so EDR, endpoint protection. Then we have XDR, which is the same, a little bit 2.0, a little bit more sophisticated, a little bit more, comprehensive service, and then we have MDR, which is the service based on EDR and XDR to cover the flood of information which comes through it and making sure that you don't need this additional staff power, let's say it like this, and you reduce it. And so this is, again, one more time, this bread and butter business, which is growing by roughly 25%, yeah? And this Singularity platform, one more time, is combining all those kind of services and granting access to the customers to the services through the Singularity platform. And then we have, that is so basically this pillar, what is displayed here. Now we come to the most right position pillar, which is identity security. So identity security is actually quite a simple one. I mean, it's including identification, authentication, authorization of users. Yeah. So different players, like all the big companies like Palo Alto, like Crowdstrike, offering this. But as well, there are players out there like Okta, so competitors who are only focusing identity management. It's really like this. I mean, the most simple relation or example for it is like really how you grant access of the users of a company to the different devices, different clouds, this kind of stuff. That is identity management. And I mean, when we take a look on the CAGR, and again, one more time, EDR or endpoint protection was 25% for the upcoming years. Expected here, when we talk about the US, it's just roughly 13%, 13%. Yeah, so roughly almost 50% of the yearly growth is expected. So that is a little bit more an older business, not so much potential anymore. It's not that heavily focused by a lot of companies at the moment. You know, it was maybe in the past, in 5 years, 10 years, 15 years ago. Most of them are already covered right now with security solutions, and that's not really anymore the hot business, even though you shouldn't forget 13% is 13% market growth. Yeah? So that's definitely not that bad. Yeah? But now we go on to, we covered this endpoint protection, the bread and butter business, the identity management business, and we go on to a first little bit additional business, and you can see it here. SentinelOne launches the Singularity Security Data Lake. And you know, saying, well, okay, Julian, you just explained Singularity is basically the platform on which all the different services and products are accessible. And that's right, but when we talk about Singularity Data Lake, that means a different one. And basically data lake, Singularity Data Lake means it's a processor of data. Yeah? So they're providing as well a service to support the customers to process all the data in those data lakes, in those clouds, let's say it like this. And so that's not 100% true as far as I understand cybersecurity business. If I'm not correct, please step in and leave me a comment at the chat section. I will check it out later on, but at least that's my understanding. So however, that is this kind of what they're talking here about when we talk about the platform, this data business here. You can see it here as well, Singularity Data Lake. So here they're providing services and products to process the data of the customers. Yeah, not 100% security focused, but as well a nice add-on, and there are some synergies existing. And this business they launched, so Singularity platform was launched 2020, beginning of 2020, and this data processing business was launched in April 2023, so 1 year and 4 months ago. Yeah? And now we have some more new products then launched recently, and you can see it here. SentinelOne, that was a very, very big one actually. SentinelOne completes acquisition of PingSafe. And PingSafe was a CNAP provider, and what does CNAP stand for? CNAP stands for Cloud Native Application Protection Platform. One more time, Cloud Native Application Protection Platform. So what does this mean? So that's actually solutions to protect the applications which are running in and through the cloud. Yeah? And based on this PingSafe acquisition by SentinelOne, they heavily quickly integrate us in their existing CNAP solutions, but now they have a way more sophisticated solution. And actually this CNAP business is, one more time, the more or less bread and butter business for Crowdstrike, for the strongest competitor, which we will focus later on. And they have this Falcon Cloud, that is their CNAP basically. And so SentinelOne has now their own, let's say, CNAP solution. So they have another module next to their endpoint protection, bread and butter business, next to the identity management solutions. They have a portfolio of CNAP solutions for focusing the needs of cloud vendors basically. When we talk about the potential CAGR, you can see it here. It's a little bit in between of endpoint protection and identity management. So endpoint protection 25%, identity management 13%, and here we talk about a CAGR in the upcoming years till 2030 of roughly 22%. So still a very, very strong one. It makes perfect sense to enter this market as well to dig the full potential. Guys, let us quickly check together what is the status with the results, if they are already live or not. Okay, they are not. If as soon as they are live, we can see here that the just slightly recognizable Q2 letters will be fully covered in purple color, and here Q2 is at the moment not the case, so I guess we have a little bit more time. So we have this CNAP business, and identity management and endpoint protection management is all what we've covered already right now. And one more information I want to share when we talk about even other abbreviations. So there are a lot of abbreviations on their website, and sometimes a little bit difficult when you're new to the business to understand it. And again, one more time, for me it is as well. But services, for instance, you have it now here, this MDR, what I've already mentioned, is managed detection and response. And behind it is a DFIR. And that's one of the last abbreviations which I will cover today. And DFIR stands basically for Digital Forensic Incident Response. I have some notes here, so that's the reason why I always check out so I'm not missing the words which are standing behind those letters. So one more time, DFIR stands for Digital Forensic Incident Response. So that's another service next to EDR, next to XDR, and next to MDR, which covers identification, investigation, and remediation of cyber attacks. So it's really this live thing and making sure to secure evidence, so secure proof of what happened, when it happens, to learn out of it, to really make sure to find the source who attacked this kind of stuff, this forensic part. And this is another service, as you can see here, which is getting provided as well by SentinelOne, on the side, as well as an option, let's say module, let's say it like this. However, they have another product release. So this PingSafe solution took place, and the finalization of the integration took place in roughly February this year. And roughly 2 months later, they announced the news with the headline, SentinelOne revolutionize the cybersecurity with Purple AI. And Purple AI is really their go-to approach for artificial intelligence, basically. So it's not just a simple pilot, let's say like this, who, like a chatbot who is answering you questions when you are, whatever, if you are a cybersecurity expert and a staff member in a company who is a customer of SentinelOne. That's not like this. It's way more comprehensive and really a generative AI solution. And it actually can, in best case, result of it that you don't need any cybersecurity experts at all. So you really, maybe as a company before, you have been a customer of another cybersecurity vendor, and now you're working with SentinelOne. Now you are tickling the box at Purple AI. The best result of it, maybe before as a company you are working with free cybersecurity experts to cover the needs of the company and defend and protect the data and accesses and everything. And because of Purple AI, maybe you need only 1 or 2 anymore. So really you save in best case staff members. So we have, next to the Singularity platform and different kind of security options, we have Purple AI, or let's say Purple, how they call it, and that is their AI offering. And the last aspect I want to cover, which I already explained, in August 6th, so roughly 20 days ago, they launched as well globally their offer for MDR, for this managed, you can see it here, managed detection and response, MDR. So one more time, and you see a DFIR, so this forensic solution. However, MDR is really the service based on endpoint protection, on extended endpoint protection, and which covers the rough flood of details and data which result out of it. And it's more like a service than a product, to avoid extra stress for the customers of SentinelOne, let's say like this, because you need to know that SentinelOne is somehow the legacy business. They are targeting more aggressively their small and medium businesses who can't invest that much money into cybersecurity, who can't afford to have an own department of cybersecurity experts, for instance. That is their legacy customer base, let's say it like this. And yes, SentinelOne, it seems like it's working like this. It's avoiding this extra need for staff, for instance, as soon as you are a customer of SentinelOne solutions. But on the other hand, the result of it with all of this automated AI solutions is that the need for somehow covering this huge mass of data, huge mass of processing power, that's definitely a challenge, what I've read at Reddit. That can be a downside of SentinelOne solutions compared, for instance, to Crowdstrike, to their major competitors. And with this purple AI and with this MDR solutions, they targeting a little bit more to minimize this effort for the customers of SentinelOne. Yeah, so I like this very much. And yeah, so let's go back and talk a little bit about or check first if the results are already live. But even though they are live, they are live right now. Yeah, so I step up and accelerate a little bit my briefing process over here. But I want to talk a little bit quickly about the performance of the solutions, which I talked about it in the past 10 minutes, and then we will cover a little bit competition and some news. And I hope in 15 minutes I will share the results and together review them. And I prepared as well an Excel sheet where we can enter some KPIs, some data out of the press release and the shareholder letter. And by doing this, I will provide you a little bit more sophisticated rating, how good, and the verdict, how good or bad I think the results have been. However, let's go back and share the screen and talk quickly about the efficiency and how good those solutions are we talked about. And here's a Mitri attack evaluation. So Mitri is quite a big name in the business, and they are scoring different kind of players. And I think here they scored 13 different vendors of cybersecurity solutions in September last year. And you can see that SentinelOne really gets full points, everything what can be accomplished. SentinelOne make it happen. And I think I've read, don't name me on this, but I think, if I'm not mistaken, all of the companies who participated, actually SentinelOne achieved the best result of it. Yeah, so not every company covered all of this kind of different or successfully handled the different challenges. Yeah, let's say like this during this test. And basically they somehow attacked like with different kind of Russian or Chinese attack principle approaches during this test to really cover different kind of more or less realistic scenarios. Yeah, so I guess if you're interested in getting more information about this, make sure you check this out by yourself. But it looks for me on the first glance quite well, those results. And you can check it out as well here on comparison platforms like Gartner. You can see the rating is very, very strong. You can see, of course, not everything is good, and there are as well some negative response, but overall 4.7 out of 5-star, potential 5-star rating is, I guess, a quite good result. And we're talking about overall of more than 1,700 customers who provided feedback about SentinelOne, so it doesn't look that bad actually. And then we have here another one here, which is G2, and you can see as well, it's 4.9 out of 5. And it's just about this Singularity Cloud Security, so GNAP basically, so the newer business. And you compare it here to other players like Wiz, for instance. And we'll talk about Wiz in a moment, so you can keep in mind this company. But at the moment right now, even though if Wiz has more overall ratings, received more ratings, the quality of the rating is higher for SentinelOne than for Wiz. So that's as well some positive. At least it doesn't look that bad, let's say it like this. But keep in mind, cloud security is more of a newer business, or let's say they're rolling it out since the PingSafe acquisition, this KNAPP, Cloud Native Security Services. They're rolling this out more aggressively. And then we have something what you can see when we talk about a lot of different kind of software companies, no matter if it's DevSecOps platforms or whatsoever. We have this Gartner and Forrester quadrant illustrations, as you can see here, and you can see they can be leaders in execution, or you can be leader in vision, or both. Yeah, execution is really how they roll out their solutions, how strong they are with this in terms of selling this kind of stuff, and how good their product is. And you can see here a lot of different kind of competitors, very popular for sure, Palo Alto, Crowdstrike, and of course Microsoft with Microsoft Defender and other solutions. And you can see in terms of execution, there's definitely some room for improvement. When we talk about division, it's already quite close compared to Microsoft and Crowdstrike, and I can imagine all of them have their strengths and their weaknesses, and sometimes it depends on the specific salesperson, on the customer, on the overall setup, which provider of cybersecurity solutions getting chosen or selected by the customer. Yeah? So maybe it's about nuances or about details. However, what this shows is that SentinelOne is definitely not some niche player or something like this, even though it's way smaller than Microsoft or CrowdStrike. It's definitely head-to-head development, and SentinelOne at the end is definitely described as a leader in this leader area as well. And here we have this Forrester one, so it's a little bit quite same to Gartner, another company providing this research. And you can see here it's designed a little bit different in terms of these waves, but you can see here is as well basically execution, and here is this completeness of vision, yeah, more or less. And you can see that actually at this, when you compare it to this Gartner, here it looks not that great. Yeah? So honestly, SentinelOne is just among some others, and especially CrowdStrike is way ahead. And actually, and we talked just about this endpoint protection. That's important to understand. Not about KNAP, not about identity management, just this bread and butter business, EDR. However, here it doesn't look that good, that well for SentinelOne. Yeah. But overall, when really keep in mind this kind of different results, it looks quite appealing for me, yeah, as a non-expert. Yeah. And now we talk quickly a little bit about competition of SentinelOne. Let me zoom out a little bit so you can see it. And here's CrowdStrike, and you can see already, okay, there was this big outage going on. I guess you are already knowledgeable about it, informed about it, but we will cover this as well in a moment, but not too heavily because it was kind of quite public, because it was the largest incident in case of this kind of cybersecurity outage ever by far. So yeah, it was quite present in news. However, what I want to show you is that CrowdStrike is a player of very similar provider like SentinelOne, but it basically grow way stronger than SentinelOne in the past, and it's even providing further products and services. They call it modules. Yeah, so they have as well this Falcon platform and different modules which you can order as a customer. If you need additional security for cloud, you can tickle the box there. If you want to set a higher focus on identity management, you can tickle this box. But they're providing even further modules covering more different kind of or have more capabilities in them, let's say like this, what they provide through their portfolio. And you can see, if you take a look on the past 5 years, it's developing very strongly and developing very on a high reliable scale. But one more time, you can see it here, very reliable. So definitely a huge favorite by the investment audience, let's say like this. Then we have Okta, we already talked about it. Identity management platform, yeah, so this 13% CAGR business. And you can see they're providing as well quite reliable services and results in the past quarters. And we have Palo Alto Network, which is, I guess, as far as I know, the next to Microsoft, the largest vendor of cybersecurity solutions. And even them, they're providing always very strong results. And they have even a more comprehensive product portfolio, service portfolio, compare it to CrowdStrike, for instance. Yeah, but actually, what I want to show you is, you can see it here. I utilized Seeking Alpha, and let me zoom out a little bit. Yeah, and so we have here the different, a little bit like this, and we take a look at the past 360 days, and zoom out even a little bit more. Yeah, no, it looks good. And what you can see is the EV to sales ratio. Yeah, that's quite interesting. And yeah, it developed differently, especially since CrowdStrike dropped, of course, in June. But at the end, what I want to show to you is that somehow out even a little bit further. I hope you can see it right now. Yeah, I hope it's working. But what I want to show you is, when you compare Okta, start from the bottom, we have Trend Micro, which yeah, is a little bit, I think it's server protection, but however, Okta is something, identity management, you can see it's quite cheap compared to other cybersecurity companies with an EV to sales ratio of 6.5. But then already, with not a big gap, SENTINELONE follows with roughly 10. And keep in mind, I mean, they are not providing just identity management solutions which don't grow that much anymore, where it's not so much market potential left. They have as well cloud security, endpoint protection security. They have this AI purple offer, this singularity data lake solutions. So keeping this in mind, I guess 10 EV sales ratio is not that bad. And then you can see it here as well when you compare it, for instance, to Cyber or to Palo Alto, to Zscaler, and especially to CrowdStrike. And CrowdStrike, the direct competitor, yeah, way larger, but it's always about the shareholder value, let's say like this. And compare SENTINELONE to CrowdStrike, you can see it's almost double the price, but double the valuation, way more expensive CrowdStrike compared to SENTINELONE, and even after the outage which took place. Yeah, so here you can see which kind. Yeah, maybe it depends on what is your perspective, but maybe CrowdStrike is still priced to perfection somehow. But if you compare just SENTINELONE here to CrowdStrike, you can see that there's definitely some upside, maybe some downside as well from CrowdStrike, but as well some upside from the perspective of SENTINELONE. But we will see. I mean, one more time, CrowdStrike is just delivering results, and actually tomorrow they will share with us the earnings release, and then we can compare CrowdStrike to SENTINELONE results. And then we cover this with the earnings roundup stream in the future, maybe in October, and consider as well the call of SENTINELONE, the information which will get provided later on, and as well compare it to CrowdStrike results. So make sure you're not missing this episode in the future. However, today we will not cover that heavily CrowdStrike, but you can see potential still there when we talk about the competition. And we have here another one, Wiz, which is a provider of cloud security, so basically as well this kind of KNAP, and it's one, or actually the strongest growing cloud security company or software company which is growing in terms of revenue in general. It's crazy how quick they are growing in terms of ARR, annual recurring revenue, so this really subscription revenue basically, which is the core number for SaaS companies, for software as a service companies, and you can see it's growing very, very heavily. And why I'm sharing this kind of company to you, Wiz is actually compared a small company when we talk about the overall revenue, which is, when was this news announced? But I think they have just a few 100 million ARR basically, yeah, right now. But why I'm sharing this is that Google, so Alphabet, they talked about purchasing Wiz, yeah, maybe to integrate it and connect it to their Google Cloud services, yeah, and already in-house providing security solutions. Actually, this deal was denied by Wiz. Wiz will very likely will be a publicly traded company or providing shares not that far in the future, so it might be interesting for some of you as well. But what I want to show you with you, yes, it's one of the strongest growing companies in terms of revenue. You can see here we're talking about 350 million revenue, so SentinelOne is going very straight to the 1 billion, even though it's not growing that strongly year on year. But this alone, this company, Alphabet, offered 23 billion US dollars, yeah? And we're talking about, going back here, talking about an EV of just 7 billion US dollars currently at SentinelOne, even though it's tripled the revenue, yeah? And it's providing quite comprehensive portfolio of solutions, so that shows what kind of potential is existing. And now very quick, before we jump into the numbers, just some news, guys. And that's not much what I want to share here, don't worry, and then we will really straightly cover those results for today, which I hope will be a good one. But you can see here, in the middle of July, this Crowdstrike IT outage affected 8.5 million Windows devices. You can see Delta Airlines, a lot of airports, planes couldn't departure, different staff members of, for instance, Delta Airline didn't have access to their computers and could work. Yeah, they need to go as well back to pen and paper, like we have seen here already when we talk about the cyber security attack to the car dealerships. So that was very strong in media, and right after this, as already shared, Crowdstrike, even though in the past 5 years it doesn't look that much, but when we take a focus on the past 6 months, it looks already way more impressive. It's dropped very, very heavily, basically, because this outage was affected by Crowdstrike. They released an update, maybe, or very likely didn't test it that intensively before, and so yeah, basically when you want to boot your computer as a staff member and the customer for of Crowdstrike, you had blue screen and couldn't enter your daily business, let's say like this. So that is definitely something where we see potential that maybe the direct competitor Crowdstrike of SentinelOne, they can get shares out of it. But honestly, I'm not convinced that heavily by this thesis. Yeah, I guess it's not negative for for SentinelOne, but you should at least keep in mind that in general it creates some doubts in terms of cybersecurity and how the processes is working in terms of update, how strong is the impact, and the power of this. Maybe the power of the cybersecurity companies is too strong nowadays, if you can see this kind of situations right here. And that is as well, it can have a negative impact on all vendors of cybersecurity actually. But yes, there's a chance, because it was affected by Crowdstrike, that SentinelOne gets some market share and some customers which are getting transferred from Crowdstrike to SentinelOne. But you need to keep in mind, we're talking about long-term business a lot of times. Yeah, so I mean, there are expiring contracts, so contracts need to expire, long cancellation periods, and it needs time for separation and acquisition, yeah, for new vendors, yeah, to switch from Crowdstrike Falcon system to SentinelOne Singularity system, yeah. So for sure there will be not any impact on the results at Q2 2024. I expect not even in general on 2024. I expect maybe there will be an impact on 2025 soonest. We will see if there is an impact, so I'm quite conservative in this regard. Maybe you see it different or others see it different. However, at least there is some potential. What you need to keep in mind that basically SentinelOne can participate and receive profit out of the situation, out of this outage of Crowdstrike. Yeah. Then another aspect I want to share is Thomas Weingarten is the CEO of SentinelOne, and as you can see here, so basically he's selling a lot of shares in a lot of different situations in the past months and quarters, and yeah, people don't like this at all as well, or a lot of time not at all. For me, it's not that ever interesting, honestly, guys. For me, I see it as a very positive sign, as if some insider is buying shares, but if they are selling them, can be for different purposes. I mean, it's part of their payment basically of the salary, and it's just natural that they want to reinvest it or diversify maybe their investments and not want to be 100% invested as a co-founder like Thomas Weingarten is, to just 100% be affected and depend on the outcome or on the performance of SENTINELONE. So, but I want to share that the CEO and as well you can see the CFO, they definitely selling a lot of shares. Yeah, definitely some aspect. And so, guys, last but not least, I want to quickly share the target of today when we talk about the results, and just on a superficial scale, the details we cover later on. But before this, I want to quickly share, make sure, okay, 7 people are, is it right? 7 people are right now live. That's very nice. Highly appreciate this, guys. So, guys, if you like what you see so far, please make sure to leave a like and subscribe. It's always keeps me motivated, let's say it like this. But however, before we jump right now and share the results, and the reason why we all are here, I want to show you my expectation in terms of profits, so earnings per share and revenue. And earnings per share, I mean the overall common sense of the analyst is more or less a neutral forecast, and that is what I want to see as well. I'm happy if they reach a neutral level. That would be already a very good result for SENTINELONE, and even maybe they cannot go just for neutral 0.00 US dollar cents. Maybe they can go for 1 cent up, 2 cent up, let's say it like this, and surprise a little bit would be amazing. But already neutral 0 in terms of earnings per share, I would be very, very happy. So no loss basically. And revenue, I see a little bit different. I mean, the overall forecast and the guidance by the company itself is roughly 197 million US dollars. And I want to see a little bit a beat for sure by roughly 5 million. You can see it here, 5.16 million US dollars. Why? Actually, it's more about the absolute development Q1 to Q2 2024. When we take a look at 1 year ago, Q1 2023 and Q2 2023, they developed on an absolute number by 16 million US dollars. And I want to see, yeah, on the relative base of percentage year-on-year growth, it's sometimes difficult to stay on the same level year by year by year, always provide, let's say, 40% year-on-year growth. That's not realistic. But on absolute scale, I want to see at least the same results. So I want to see that at least they push it here as well by this 16 million US dollars. So one more time, EPS neutral 0 US dollars, and revenue 202 million US dollars or more would be satisfying. Okay, guys, now we talked about the results. We have some more details we will cover right after, but now we jump into the actual earnings release. Updated one more time, and we go, I think, to the shareholder letter, or maybe we'll open it in a separate tab. Let's see if you can read it well. So yeah, that's the actual one. One more time, 202 million US dollars revenue. I mean, that's the most important for me, even though there are other KPIs which will be interesting. That is what we want to see on the first glance. And you can see it here already. Here, less than 200 million revenue. Doesn't need to mean that it's bad, yeah, but however, first glance, that is not satisfying me. So definitely they beat the expectation of 197 million and something, but 199 million is definitely not a strong beat. So about the details we will talk in a moment, like free cash flow margin, for instance, yeah. But what I want to see is quickly the net loss per share, and it's 7. Okay, let's switch. I mean, first on the first glance, it's not it's not surprising that strongly, guys. And I will now make sure to put those numbers now and into the Excel sheet, and then we can go one by one through them, and I can share my opinion about them. But just give me a moment, and you can see it here just very quickly that we cover as well. I mean, we talked about revenue of roughly 199 million US dollars, and here we have as well the earnings per share, and here at least they beat it by $1 US cent. Yeah, so that doesn't look bad. And I mean, yes, I want to see 202 million US dollars or plus, but 199 million is not that bad, let's say it like this. So overall you can see both green, and that's quite fine. I can live with this. However, let's push this into the Excel sheet first. And here we are. So that was definitely a beat, even though it was not a strong one. And here we talk about the result, and it was 8.9. So, and however, I need to stack to my expectations, and because I mentioned to you with 0 I would be already fine, and everything up is positive, so this rating for me is a positive one in terms of profit development and EPS. And when we talk about revenue, again for me, even though it's not a miss in terms of their own guidance, and yes, they had a full year correction last Q1, even though it was less than 1%, but full year revenue correction, so you already, they already basically wanted to warn us that maybe revenue could be a little bit risky, the revenue expectations. And I guess we can, it's like this. We can still be happy with a 33% year-on-year growth, roughly. However, for me, it is definitely not a positive one. It's definitely not a positive one. And I guess, I mean, I tend a little bit to push it into the negative one, and maybe I adjust it later on, but I color it in yellow, so a neutral one. It's okay. It's okay. They covered the expectations. No, wait. Let's make it red. Really, sorry for this, but when I take really a look to the past year, and they go up by 16 million US dollars, and now just roughly 13 million, so less than last year Q on Q, I'm not that satisfied with it, so I rate it red. So far, I mean, revenue, I'm invested in this company because of the revenue growth, and revenue is the outcome. I don't like that much. Profit is fine. It's a neutral rating out of both, with the tendency to a little bit red because to more negative touch, because revenues I weighted just a little bit more stronger. And now we have way more information we want to cover, and we will cover in the upcoming minutes. You can see it already here. We will only consider in the rest of our verdict in the smaller, let's say, short-term metrics, the fat market ones. Yeah, so we cover as well the outlook, of course, if that's fine and still in line as our expectations, because outlook is important as well, of course. The call later on will be important too, because we want to see that Thomas Weingarten and the CFO, they talk a little bit about the Crowdstrike outage and how they potentially can participate by it. But however, you can see it here one more time, the revenue, and then we're not talking anymore too much about the revenue, but as you can see here, the past quarters, and in the last column you have this year-on-year development Q2 to Q1, Q2 2024 to Q2 2023, and we have here the Q1 2024 to Q1 2023 year-on-year development. And you can see Q1 full year growth, year-on-year growth with 39% was way higher compared to right now to 33%. Yeah, so that's definitely a strong drop, and that's definitely something that convincing. And so I guess it's just reasonable to rate it, from my perspective at least, the revenue development as negative. But however, another aspect what I like to see is that they achieve a higher level of diversification, and they do it in terms of selling or providing more products and achieving higher sales outside of their home market, the US. and you can see it changed a lot of times in the past. It was quite stable, sometimes it was higher, the revenue share achieved in foreign markets outside of the US, but I want to see that it's stable or it even gets stronger. Yeah. So let's go and step back to the shareholder letter, sharing the screen, typing in International, and here we are, and it's still 37%, as you can see here. International revenue represented 37% of total revenue. So let's go back, sharing it, typing it in, and evaluating it as the first more detailed KPI. And that's for me a neutral one. I mean, it's not surprising, it's still on a good level. I would love to see it's developing actually stronger, but however, it's better than compare it to 1 year ago. As you can see, 1 year ago it was 36%. So at least a positive development in this regard, even though Q-on-Q is stable and not developing that strongly. However, now we go and take a focus on annual recurring revenue, and one more time, that's the actually core number, or both numbers here actually, but ARR is a little bit like revenue, but it's the subscription-based revenue. Yeah, not this one-time event revenue for some, well, let's say, special services or whatever events which can get provided by SentinelOne to the customers, but really this solid source of income, what they can calculate with for the upcoming 12 months, let's say it like this. So really the core number, and let's check out together what it was and which level it was in the past, or what it is right now for full year. And let's go back to the first side, and actually wait, I guess here it is, the customers. Here we have it for the past quarters, and you can see it goes up in the past quarters by 32%, and we reached now a level of $806 million US. So going back, sharing Excel screen and putting in 806 million, and that as well, honestly guys, I mean, yes, it's just reasonable that wait, one more time, year-on-year growth on a relative scale can't be always on a very high level. But you can see last quarter year-on-year was 35%, now it's roughly 32%, so 3% down. Yeah, I mean, let's take a look what we talk about in absolute numbers. It was 44 million, and just to get a rough feeling. Okay. Maybe one more time, we'll take a look at the past. 48. Yeah, okay, the development. Okay, sorry guys, I mean, I need to be strict here, yeah? I mean, I'm not, look, there are two different perspectives. When the results today, I'm not 100% satisfied with it, that doesn't need to mean that I dump the shares into the bin, the stock into the bin, yeah? And I'm selling my shares. That's not the case. I mean, we always need to consider the current valuation, for instance, yeah. And just because of one earnings release is not convincing me that much doesn't need to mean that it's not a good idea to be invested right now at the company. I'd say it like this. Valuation is always a separate aspect. However, when we just cover ARR, the development, I put it in negative. Yeah, honestly, guys. So same like revenue, even though that's more the SaaS focused, sector-specific metric and parameter, but I don't like to see that this development Q-on-Q, year-on-year growth, it's getting down that flat that quickly, yeah, as well on an absolute scale. But however, let's take a look at the annual recurring revenue customers who going for more sales than $100,000 per year. So we go back and check out this number as well, and maybe here the development looks quite well. and we have already seen it here. So it's up year on year by 24% to 1,233 customers. Going back, putting it in, and that as well, honestly guys, one more time, checking out the year-on-year growth, last quarter year-on-year, maybe you guys look, the reference, maybe Q1 2024 was just simply a very, very strong one with 40% revenue growth, for instance, and so comparing it to it, it's maybe not that fair. You need to keep this in mind as well. But when we compare it to last quarter year-on-year growth, you can see it's down by 6%, and as well not convincing that much too, honestly guys, yeah. So just, you can see it here, just 40 customers up. When we compare it 1 year ago, you can see it was roughly 80 customers, 80, yeah. So, and afterwards 70, afterwards 90, afterwards 60, and now just 40. Yeah? So for me, it's clearly a negative result. Yeah, can't state different. Yeah, so that is definitely something what I want to rate like this. But now, I mean, we have focused a little bit more the income, the revenue creation, and achieving. So now we take a focus on the expenditure side, on the cost side. Yeah. So we want to check later the different kind of expenses and want to make sure, I mean, you need to know that SentinelOne, they still set the focus on revenue growth, no doubt about it, but as well, I mean, the CEO and the CFOs and the management, they mentioned a lot of times they want to achieve GAAP and non-GAAP profitability more or less soon, let's say it like this. That's definitely a strong focus on it. And so, of course, to achieve this target, not only achieving higher revenues is the goal, but as well to decrease the expenses. So we start with general and administrative, go further with sales and marketing, and finalize it with research and development. Yeah? And I can already tell you right now that when you compare SentinelOne to other cybersecurity vendors like Crowdstrike, in terms of sales and marketing, there's definitely some potential left. Yeah, so with 62% of revenue, it's very, very large. I think other players going for 25, 35%, something like this. So here's definitely some room for improvement. But as well, when we talk about the other expenses. However, let's give me a moment and let me share one more time the screen and go to the expenses. And here we are. Here we have them, this operating expenses. And you can see, I guess that's at least progressing in the right direction. So we're talking about 22% general administrative, 60%, oh, that doesn't look that well, I think, but however, 60% of revenue, sales and marketing, and 32% research and development. So let's go back to Excel, entering those numbers, 22, 60, and the last aspect, research and development, is 32%. And here as well, you can see it already on the first glance, and I mean it's out, the seasonality is already excluded, let's say it like this, yeah. So I mean it's based on the revenue, yeah. It's just based on revenue and not just on absolute numbers or something like this. So you can see the first glance, beside R&D, everything is developing quite strongly, but even R&D is going up. And please let me correct, it's not developing that strongly. You can see it on the bottom line, 116% operating expenses in Q1 compared to now Q2 114, yeah, just 2% up. So honestly guys, I mean, when you compare the year, one more time, what I always like to do, just year-on-year development, I mean, last quarter it was minus 16%, minus 12%, and minus 10%. and now it's just minus 10%, minus 6%, minus 4%. Yeah, when we talk about the overall operating expenses, last quarter year on year minus 38%, and now just minus 20%. Yes, of course, they can't keep this level of development, yeah, and reduction of costs, but on the relative scale, but even on the absolute scale, I guess it's not that compelling. And so maybe I'm too harsh, maybe I'm too strict, and that's the reason why I'm always do this earnings roundup episodes later on to check it out, sleep a few nights over it, read some research, read some analysts' comments, check out the call. Maybe opinions can change sometimes, but however, yes, it's more or less decreasing, but 2% just down. Yeah, it's not sure if that's that much. Yeah, I mean, look here, Q4 to Q1, it's as well not that convincing. Just 1% down. Now it's at least 2% down. However, it's not that much. Check it out when you take a look at older quarters, earlier quarters results. The development was way stronger. Yeah, and somehow it's quite flat. So, however, I keep it as red for right now. And now we check out a little bit the margin perspective. So gross margin. So gross margin basically the margin which is resulting out of the direct sales connected expenditure, then direct sales. Then we have the operating income margin, which is basically gross margin and the consideration of the operating expenses, and then we have the free cash flow margin, and free cash flow basically is the cash which is available to grant dividends, to buy back shares or lower the debt. So basically the withdrawable liquidity, let's say like this, and this number is by accounting measures and accounting activities, it can't get affected that easily by the company itself. So it's a quite transparent number. However, let's check out what are here the results. And so we go back one more time to the shareholder letter, and we start with the gross margin. You can see it here, very nice displayed, and you can see actually that looks good on the first glance because it's up, no matter if you talk about GAAP or non-GAAP. I'm considering here the GAAP version, the black one. So it's up from 73% to 75%. That is for sure something good. Finally something good, guys, I think. So it would be already quite satisfied with this level of 73%. Is already quite high. Yeah? So like to see that it's going into the right direction. Like to see that's reaching a higher level of 2% compared to last quarter. So that's good. Now let's go back and check out the operating income margin. And let me see if I'm sharing your screen. Yeah, looks good. And here we have it. And so yes, of course, it's a negative one because you have already seen it's 114% just operating expenses. So it's just reasonable that operating income margin is a negative one, but you can see it right here. It's now 40%, and it was, we can check it out in a moment what it was last quarter on a GAAP base, so minus 40%. Share one more time the Excel sheet, put it in, and it's down from 43%. That doesn't look too bad to me, even though the jump, I mean, you can see it here, was a little bit stronger from Q4 to 2023 to Q1 2024. However, that is okay, that's perfectly in line and looks good for me actually, even though yes, it's still a quite strong negative operating income margin, yeah, gap based. So however, it's developing the right direction. That is all we can hope for. And now we check out quickly the free cash flow margin before I put in a rating, yeah, and color it. So free cash flow margin, going back, sharing the shareholder letter, and I think they don't illustrate this by a chart, they're just pushing it here. and free cash flow margin was minus 3%, so still a negative one. Actually, the management stated, if I'm not mistaken, in the outlook, but we talk about this in a moment, that this year might be the first full year of positive free cash flow. First, the second quarter was positive. I think the first one was negative. And let's see what will be now the result. The first quarter was positive one with 18%. Now that's negative one with minus 3%. Let me share the Excel sheet, and you can see it by yourself. So here it's minus 3%. So yes, it's a negative one. Yes, I would love to see a positive one, but at least you can see it here one more time. It was way better development last quarter. But at least it's positive one. At least it's developing positive. But you can see it basically leave out the gross margin, but operating income margin and free cash flow margin both developed very, very strongly last quarter. So expect, when we compare it to Q1, everything to Q1, full year-on-year growth. It's a little bit difficult to use this as a benchmark, because I guess Q1 last quarter was in many directions just quite strong. However, when we now rate it, I can tell you, for me it's a quite simple one. This one is a positive one for me for sure, 2% up. I like this very, very much. Even though it's developing not that strongly anymore, I cover it as well green in terms of the operating income margin, so I see it as a quite positive result. And free cash flow margin, I'm not sure if I go for neutral rating or negative one, but my dog is screaming actually at the moment and shaking right while doing it. So if someone is barking in the background, don't be surprised. It's my dog who's having very intense dream experience. However, talking about the free cash flow margin, it's not an easy one, I guess. I want to see that it stays on a positive level, and to see it negative actually is not that nice. So I push it. If I have the chance as an investor and talking about my own stocks, I tend to be a little bit more strict and a little bit more harsh, tend to be a little bit more optimistic, let's say it like this, in terms of rating the KPIs and the results. And so here I'm a little bit more strict. Maybe I'm too strict because it's still way better than 1 year ago, and 1 year ago it was minus 10%, now it's minus 3%, but yeah, could be better for sure. So put it in the red. Now we check out the rule of 40, which is as well a very SaaS based number. So I mean, SaaS companies, software as a service companies, you want to see that they are revenue growth focused companies a lot of times, but as an investor there's this rule of 40 where you can say, okay, there are companies out there who are achieving higher level of revenue growth, but it should be at least then if they don't have any free cash flow margin, and SENTINELONE is using free cash flow margin, so I use it as well. But if they're not achieving any free cash flow margin, at least the revenue growth should be on a very high level to achieve this 40% or up. Or for instance, it's a company with very low revenue growth, but at least then the free cash flow margin should be very, very high with roughly 40% or up. Yeah, and you can see that last quarter they achieved with 58%, and 40 is this break even, let's say like this. Yeah, so people out there, a lot of investors, they state, okay, if they achieve 40, then it's a good company. It's not that strict, but 40 or up, at least it's a good indicator that the business is going well. So what you see here in the past quarters, they only achieved this in Q1 2023, and then they dropped. Of course, specifically because the revenue growth rate dropped heavily. You can see it here. You can't see it here. But however, I can tell you, and I think with this 47% rule of 40, they achieved a revenue growth, as you can see. It was roughly 70% alone revenue growth. Yeah, even though the free cash flow margin was negative with 23%, they had a strong 70% year-on-year revenue growth. That's the reason why they achieved more than 40. But then the revenue revenue growth shrinked very strongly and raised again one more time last quarter to 40% and positive free cash flow margin. That's the reason why they pushed it through this 40 rule of 40 barrier. And so now let's see what is the revenue growth. Enter it. I think it was 33%, if I remember correctly, but yeah, then we already know what will be the outcome of the rule of 40. So checking one more time, the shareholder letter, here we have it, yeah, 33%, so that is all we need. Free cash flow margin, we already entered it into the Excel sheet with -3%, so let's go back and share the Excel sheet. And here we have it. So I enter we enter 33% revenue growth, which is actually not that bad, but you can see the result of it is the rule of 40 is not existing anymore. Yeah, because I mean mainly driven, yeah, revenue growth is a little bit lower. Again, one more time, last quarter 40% year on year, this time 33%, so 7% lower. But the big difference, of course, is the free cash flow margin. 18% last quarter positive, now -3%, so 21% difference developed into the negative. So, however, very simple, I put it red. Yeah, and you can see, I mean, I can imagine that till now, so far, if we check out the first market reactions, I imagine they are not that positive, but look, for me, the results I don't see anything that negative. Yes, I mean, the cost development, for instance, is not that positive, but however, I can imagine aftermarket, after closing bell, has ring the prices down, so right now, so stock tanked, the stock price tanked, but for me, there's not so far not a reason I would say to sell SENTINELONE, let's say it like this. However, let's take a look. I mean, shareholder orientation is important as well, and one aspect of it is for sure the stock-based compensation revenue of share of revenue. So we want to see that the shareholder dilution is not too strong. They're not pushing out too many shares to the staff members, to the management as salary. Therefore, the existing share amount, like you and I, we are invested in getting diluted. We want to see that is somehow limited. So let's check out what is the stock-based compensation of the past quarter. I hope I can find it quickly. Yeah, we already have some data here, but I want to see. Check out the table. There's always a good table for it. Here we have it. Can you see it? I'll make it a little bit here. And this line, we have it here. So that increased as well, quarter on quarter. Last quarter, 53 million US dollars. This time, 65 million US dollars. On first glance, doesn't look that well, but let's see. And I already see that someone is using the chat, so I will come back to you in a moment, collega. Quickly enter the information and check what you have written in the chat. Or maybe let's finish me the Excel sheet and then check out the chat. Yeah, I think that's the best approach. So I hope for staying patient for a moment. So going back here, you can see stock-based compensation. What was the number? 65 million, roughly. But I enter it completely in detail. So give me a moment. 64677 000, if I'm not mistaken. So actually this increased as well by 2% quarter on quarter. It's not that great. I mean, yes, at least when you compare it, so this quarter 33% of revenue. 1 year ago, Q2 2023, it was 32%. So It's up by, you can see it here, or it's down or up? It's up by 0.3%. Yeah, that's definitely not that nice as well. It's definitely not that nice. You can see 1 quarter ago it was down by 6%, and of course we want to see it decreases over time. It's getting reduced. So even if it would be stable, this share, very likely, so it would stick on 31% stock-based compensation share based on revenue. Very likely I would already rate it negative. I want to really see that it's developing positively, and that it's getting higher. It's definitely negative for me. Yeah? So a lot of red. However, that's just my first impression, my personal impression, and doesn't need to be the right perspective on it, let's say it like this. And now we want to check a little bit here, the lower part, the full year guidance, what is going on with the outlook of the company, what they are stating. So we want to see that they stick to their revenue guidance. They want to see that you stick to their margins on not GAAP based. So let's check out what is going on over here. And we need to go up a little bit in the shareholder letter. And maybe I'm way too. Here's the guidance. Okay. So quarter we check out later, but full year is 850 million. And let's see what was the latest. Okay, so I think they push it up actually. So that is something I can imagine. I didn't check the stock price right now, but I can imagine that I can have a heavy positive impact on the results, even though all the other details are not looking that appealing actually. Because look, keep in mind that last quarter they reduced the full year revenue guidance by less than 1%. And yeah, the Salesforce and other companies didn't provide good results, so maybe that had an effect for sure as well, and that stock price tanked on the next day by 20%. But however, you can see that revenue guidance, full year guidance has a big impact nowadays, and that it's now up by just 3.5 million, but at least it's up, it's stable and a little bit up. That's a good sign, that's a tendency, and maybe investors start to think, that's a sign that they get share out of the competitors, getting customers of Crowdstrike, for instance, switch from Crowdstrike to SENTINELONE, so that might be positive. However, so that's definitely something. It's definitely something good, and that's definitely something what I can already rate right now as a positive surprise, and might be a heavy one, guys. Actually, yeah. So let's see what will be the reaction by the market right now. Okay, let's check out the cross margin non-GAAP, what they are stating in this direction, and going back. Gross margin, non-GAAP gross margin quarter to be about the third one, yeah, but full year is important. 79%. So let's see what was the latest expectation. It was 78.5. So really a small beat, but here as well, everything what is up. I mean, if they keep it stable, I am already very happy. But I guess really everything what they state here in the positive, what they adjust upwards, can have a straight positive impact on the stock price. At least I can imagine. So I rate it as well directly positive. And now let's check on the operated margin on a non-GAAP base. Let's go back and check out the, here we have it, operating margin fiscal for the third quarter, and 5 till 3% minus for the full fiscal year, so let's say 4% minus. Let's go back to the Excel sheet, and here you can see it sticks like it is, so I keep it neutral. Yeah. So full year guidance, more a little bit the tendency to positive actually, and yeah, I like this to see this. Wait one moment, just for a little bit better design. Okay. So that at least is something good, and you can see already now, yes, there are different perspective, different details on a more superficial level, like top and bottom line growth, earnings per share and revenue. And we have as well more details and sector specific numbers like ARR and ARR customers or Rule of 40. And yes, a lot of those smaller details doesn't look that well, but on the profit side at least it looks quite well. On the margin side, full year, but however as well this quarter looks quite convincing. However, expenses and revenue doesn't look that well. But one more time, what we want to see, another aspect actually, is the quarter revenue guidance and outlook. And as you can see here, I want to see that we talk about roughly $212 million for Q3. And why that's the reason. I want to see that it's 50, you can see $50 million up forecast on forecast, Q2 to Q3. And that would be the same 15 million what they have stated 1 year ago. So as you can see here, Q2 2023 to Q3 2023 as well, 50 million up. So 212 million is what we want to see. Let's go back, sharing the letter. And we have 209.5, so it's lower than expected. So I honestly, because they adjusted, if I'm not mistaken, the full year guidance by a few millions, I expect they're calculating and they're assuming Q4 2024 will be a strong quarter. So last quarter this year will be a strong one. And it's already developing stronger with Q3, but Q4, there an impact will take place. And now I think really the reason for this might be the Crowdstrike situation, that they tell it takes a little bit more time till the impact is measurable, and there is an impact, a positive one, on the SENTINELONE business because of this Crowdstrike outage. But I can imagine that is the cause, because Q3 actually is not looking that great. However, full year is up right now. So, oh, I splashed a little bit some water on the table on my mouse pad. That's not that good. Look, guys, I'm getting nervous. However, let's put this as well into the sheet. And we're talking about, again, one more time, roughly 3 million less than I expected. But yeah, it can make a difference. Don't like this much. However, it perfectly fits into this overall revenue result level. And no matter if we talk about the actual results of this quarter and the expected one of the upcoming one, doesn't look that well. But at least full year guidance is up. And that is, I guess, way more crucial and essential than even maybe the results of this quarter. Yeah, so I can imagine stock price might be up. However, before we jump in and check the chat reactions here at the stream, we check the first reactions on platforms Seeking Alpha of the analysts and the users, and we check out the first reaction on the price. I quickly share my PowerPoint slide deck. I wanted to cover some more information actually, but to provide you a verdict, here you can see it. Those are all the different metrics we covered today in the Excel sheet, and you can see revenue was for me negative. Profit was actually positive one, even though it was not a strong beat. There was a beat in terms of EPS. Guidance, that's a mixture. So full year is positive because they raised it up from 811.5 for the full year to $850 million. That's definitely some good news from my perspective, and maybe they even push a beat through it. However, a quarter doesn't look that well with 209.5, so Q3, that's negative for me actually. And then we have gross and operating margin, and as I communicated a moment ago, let's go back to the Excel sheet. You can see it here. It's basically green and yellow. Gross margin green because they raised it slightly, and operated margin they keep it stable, so I rate it as well neutral. So let's go back. Sharing the screen one more time. We have gross margin was green, operating margin was neutral, and so I would say the guidance itself you see it's a little mixed here. We're talking about revenue wise on a neutral tendency to green, because full year has way more weight in it, is way more valuable from my perspective than quarter. So I would rate this yellow till green, but put it on neutral. And this one here, operating margin for me is more important than gross, actually, because operating is gross margin plus operating expenses, so it's considering more costs. So here I tend, as well, it's a mixture out of green and yellow, so positive and neutral, but it tends to neutral. So I would put this overall one to neutral, the guidance, but with a slight green tendency, honestly, guys. Slight green tendency because of the full year revenue outlook, which gives at least some hope, even though today's revenue is not convincing me that much. Yeah, and then we talk about this true SaaS DNA aspects, ARR, and $100,000 plus annual recurring revenue customers and Rule of 40. All of this, we can keep it very simply, was negative. And quite strong negative, even when we talk, for instance, the Rule of 40, which was before 58% and now is just at a market here 30%, and you can see as well here development not that great. So that's definitely a quick decision, quick verdict about this. The DNA of SaaS business, of software as a service business, doesn't look that well. However, there are other metrics we want to cover, and the next one is the business sustainability. So we're talking about expenses, we're talking about margins, and operating expenses was negative. One more time, everything basically was negative, especially research and development. Yeah, I mean, it's investment in the future. Result out of this, maybe the Singularity platform, the EDR, the XDR, the MDR, the DFIR solutions, the identity management solutions, the KNAPP solutions, yeah, this data lake processing solutions. All of this can benefit out of more research and development expenditure. But however, I don't want to see that the stack is increasing quarter on quarter based on revenue, or is just decreasing on a low number. At least overall it's decreasing by 2%, but I would love to see a stronger development. However, you can see it, operating expenses is negative. And when we talk about the margins, gross margin was very strong, up by 2%, operating margin by 3% down, not that strong, but still for me satisfying, let's say it like this, and sufficient. However, free cash flow margin before 18% positive, now minus 3%, better than 1 year ago. However, development not enough for me. So let's push this quickly to the verdict sheet. We have it right here. Operating expenses was red one. Free cash flow margin was red one, but on the other side, gross margin was positive one, actually quite strongly, and operating income margin as well, the development. And so overall, we push this in the neutral rating. Yeah. So far you can see, yes, when we take a look at the Excel sheet, there's a lot of red, but we're still on a more or less neutral level. Yeah, we can see revenue, profit, and guidance is more or less, when we take a bland verdict out of it, it's neutral. And the first both results and parameters, the DNA of SaaS and the business sustainability, it's neutral to red. So overall, we are still in the neutral area, let's say it like this. A neutral area means I'm more or less satisfied. Yeah? It doesn't mean it's nothing negative if it's neutral. If it's neutral, then I'm investing just in the stocks. I'm already convinced they will perform very well in the future. And if they push neutral results quarter after quarter or full year results, that means that basically they are on track. And my conviction stays as it is. So neutral is already a good sign. However, let's cover the last both bullet points. Shareholder value orientation, stock-based compensation. Here we can make it very quick. You can see it right here. The share of compensation in regard or in relation to overall revenue, overall achieved revenue is up. That is what I don't want to see. I want to see it's down for sure. Even a little bit is already worth something. Even if it would stay on the same level, that would be negative for me. I really want to see it's getting down, but it's up, so that's definitely for sure red. No doubt about it. Shareholder valuation, I can't tickle this box. Yeah, it's for me definitely some negative stuff going on right here. Not the most crucial aspect. Yeah, it's just part of how companies work nowadays, how they compensate the work, the effort of their staff members. But here I want to see as well some positive development. And now we check out diversification through internationalization, actually the less crucial aspect, but however I think it's an interesting one. I like diversification in this regard as well, even though it's a software business, and I think international diversification is not that crucial. But let's go back to the Excel sheet. We already inserted the number. You can see it's 1% up compared to 1 year ago, with 36% international revenue, and now it's 37%. So quarter on quarter, no development at all basically, but at least year on year by 1%. I think it's already on an okay level with roughly 40%. So that's for me neutral, that's for me okay. Let's go back to the evaluation sheet, as you can see here. So this is what we put in neutral color, even though, one more time, it's not that relevant. It's not that relevant. We give it overall a neutral rating. And yes, it looks a little bit awkward on the first glance because a lot of different colors. It's not full red, full yellow, or full green. Sometimes that's the case actually at some companies I'm invested in, like Hims & Hers. It's very green, always very green, very, very positive results. Alphen last quarter was, for instance, as well very green, but the one before very, 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 very negative actually. And still I kept my position, so one more time doesn't need to mean that the result of it I sell it. However, these results are very, very mixed. Yeah, those both on the bottom, number 3, position 3 and 4 are not that essential, not that crucial. Those are way more interesting as an investor. And of course, top and bottom line growth and the guidance. However, one more time here on the superficial scale, neutral will be the result. Here we have, let's say, something between negative and neutral, tendency a little bit more to negative from my perspective, honestly. Because for me, IRR, so annual recurring revenue, is more important than the expenses perspective. However, again, tendency to neutral. So overall, if we push a rating out of it, for me, it's a neutral one. Yeah, it's a neutral one, and that's actually when I keep in mind that first glance we have seen revenue growth 33%, and some other numbers at the beginning didn't look that well, actually that compelling. I am quite satisfied with the neutral outcome of this stream, of this earnings session. Yeah, and so guys, now I will first check the chat because Mohammed utilized the chat luckily, and I want to see what he wrote. Then I will check the price. Stock price, again, one more time, I can imagine. First, I thought the price is tanking because of some negative numbers, especially when we talk about revenue results. But however, what I really like is actually the guidance, the full year guidance, which might be more relevant to the investors, and they updated a little bit into the more positive direction as well, the cross margin. So that looks good for me. That is what I want to see, and I can imagine that this might be very impactful. And if the information that's getting communicated during the call right now, which I guess currently going on with Thomas Weingarten, the CEO, and the CFO as well, if they communicate good information and they convince the audience, that somehow SentinelOne business is everything developing right, and they can participate on this Crowdstrike outage. I can imagine. I stick more that the stock price is up, but not that strongly. I can imagine stock price is up by something like 2.5%. That is my guess, my bet. Let's say it like this. If I need to make someone, even though it's right and quite into the dark. But however, first we check out the chat comments, and Mohamed is stating nice life for S earnings, especially with sheet showing metrics including free cash flow. Creative One Pro, keep it up. Thank you so much, Mohamed. I really appreciate, highly appreciate that this positive feedback that always keeps me doing it. I know not everything is perfect. Yeah, maybe to do a power nap right in advance of the earnings call wasn't the best idea, the earnings results. So again, I was a little bit dizzy, and it was the first time I'm covering SentinelOne, so for me as well, I'm not a cybersecurity expert. I try to improve my skills over here, but I hope at least it supported you and others as well a little bit. Even though, one more time, it's no financial consultation or whatsoever, and it's more or less entertainment what we're talking about here, yeah. And I'm sharing just my opinion, my view on it, but there's no guarantee that the data I'm providing is correct, that my opinion is correct, that the outcome of it is correct. However, and now let's check the stock price together. One more time, sharing the browser, going back. So again, I guess it's 2.5% up because of this full year expectations. But look, if it would be negative, I would not be surprised as well that heavily. Yeah. So you can see it here. It's roughly 1% up after hours. So 0.89%. I expected something like 2.5%. Let's see how the market, after opening bell ringed tomorrow, will react to it. However, I mean, I like to be invested and stay invested in it, and I can imagine that future news can create further tailwind and support for this company. So actually, that's great, good. And now together, last but not least, what I want to check out is on Seeking Alpha, the first reactions by the market. So we can see here we have 18, so that's already nice. I mean, SentinelOne is not the smallest company, cybersecurity is quite hyped, so I like that people are reacting to it. That's not the case of all companies I'm invested in. Let me see if that's a little bit small. I will zoom a little bit in and hopefully... okay, we can put it definitely larger like this, so you can read it as well. So we check out the first reaction 23 minutes after 4 p.m. Eastern time. Office Game is mentioning disappointing results overall, especially no guidance. Guidance is existing. I'm not sure what he's talking about. Net new IRR down year on year, that's right, 100%. Gives you an idea how Crowd has been beating them prior the outage. Crowd expected to be up 10 to 15% new net IRR for Q2 on guidance. So yeah, expectations are higher. That said, commentary on call could turn it around if they talk about a significant pipeline build. The same what I mentioned, very likely maybe Q4. Some result out of this Crowdstrike situation, and maybe out of their new solutions like Purple AI, like MDR, like Knap. Maybe that creates momentum. Maybe that might have an effect on the price. That, yeah, I'm sharing the opinion. However, and he's stating will take several quarters to gain anything from the outage issues. Yeah, and I'm sharing this opinion as well. So I'm not sharing this guidance topic because they talked about guidance in their results, and yeah, but yeah, he's right. ARR is definitely not convincing. I worried it as well the same, but let's see how they react. Net new IRR down year on year. OOC, how are you computing that from press release? Increased. Yeah, okay, he's just putting a statement of it to explain it, and you can see here CW85, this user for instance, is see this as a little bit like negative impacted, even though it has 8 likes, yeah. But he thinks that maybe the background of this negative comment is the reason that Office Game is short short seller basically, or short invested and has a short position, and so betting on negative impact on the price, and that might be the reason. But I guess that's not the case. You know, it's not that negatively stated. But yeah, it has a very negative feeling what he's stating here. You can focus as well and can tell, especially no guidance on guidance. I don't see this on guidance. I mean, revenues, they updated positively. They updated gross margin positively. They kept the operating margin on a neutral level, and you should not forget. Let's see what will be the development. Yeah, so it's just reasonable that the management, even though maybe there is some potential impact in the 2025 or Q4 2024, it's I think just reasonable that they're not going that optimistic and telling immediately how we will achieve that kind of number or whatsoever. Yeah, I understand what he's telling, but I think again one more time the results. Yeah, maybe for those who expected very, very positive quarters results for which reason whatsoever. I mean, at the end, again one more time, it's very unrealistic that the outage of Crowdstrike has an impact. It was in July, so or June, I think, but 1 quarter or 1.5 months left in this quarter. So even there would be an immediate impact, it's very limited because it's just in the mid of Q2 2024. And on the other hand, one more time, there are long contract periods, cancellation periods, and transaction and acquisition periods to transfer or transit customers from Crowdstrike to SENTINELONE. If that might be the case in the future, who knows? But if it's taking place, definitely it takes more time. Okay, let's go on. Alpha Sierra, I like the improvements, but the minus 40% operating margin is still a huge concern. Yeah, understand it, but again, one more time, I'm at least happy with the development from minus 43% to minus 40%. Yeah, they're burning a lot of money, but that is not that surprising, let's say it like this. And I mean, one more time, the development, especially in terms of free cash flow margin, was very strong, Q1 2024 to Q4 2023, for instance. And maybe it's that volatile. Let's see what will be the outcome of next quarter. Yeah, I mean, yeah, why not? Then Yield Hunter 196 is mentioning clear path to profitability. Stock should move up soon, not really expensive for the growth rate. And yes, he might be right. And one more time, I'm not that convinced, but I shared with you that comparison in terms of EV sales, as you can see here, and EV sales ratio, and you can see Crowdstrike is way more expensive with roughly 19, and SENTINELONE is currently on a level of 6. So that is what you need to consider. So even though if Crowdstrike is still pushing out banger results, which might be the case, SENTINELONE is not achieving at least a share of this attention and share of this positive feedback. Yeah, so that is what you need to consider as well. Okay, let's go on with other feedback of the users of Seeking Alpha. Top Gun 2 is writing all this hoopla about Crowdstrike, like Palo Alto Network. No extra growth is associated with it. And then we can see the frustration on it. To Top Gun, tell me something. How on earth could SENTINELONE have profited? That will be exactly not what I've told you a minute ago. So as to materially change their figures for the quarter in the 12 days between the Crowdstrike incident and the end of the own quarter. Yeah, so end of Q2 2024. The average sales cycle in several weeks to several months, not a few days. As for guidance, I bet they are sandbagging, give it a few quarters. Disclosure, no positions in cybersecurity. Also, I used to be long Crowd until February, March. So this medicine guy is claiming that he's quite neutral, and he's claiming exactly what I'm telling you. So if there's an impact, very likely not on this quarter, not on the next one, not even on the other one, at least from my perspective, I guess it's earliest 2025. I guess management, again one more time, because of the revenue guidance adjustment to the up, even if it was very small, but it was an improvement. I can imagine expect a stronger Q4 already, not a Q3 but a Q4. But yeah, I'm totally sharing this opinion. And El Financiero is reacting as well to Top Gun. I guess very likely more or less the same, but you can see it here. How long do you think it takes an enterprise company to switch or to onboard a SaaS solution? This isn't done in a week. Crowd was July 19th, so this outage was July 19th. Sentinel's quarter entered July 31st, so you won't see any significant impact until 2 or 3 quarters, especially since the customers are SMBs and enterprises, so small, medium businesses and enterprises, so big customers. Quad will be similar, but listen to management guidance over the next 2 or 3 quarters. Yeah, and that's right. I mean, look, he's not telling anything new to the opinion of Medicine AV, or to my opinion actually, but he's completely right in terms of this customer category. And we need to stay very close to Crowdstrike, what they will state tomorrow during their call, what kind of earnings they will release basically, and especially in the upcoming months. And what you need to consider as well, really, the management stated of SentinelOne stated in the Q1 2024 earnings call that, I mean, again, one more time, their bread and butter business was endpoint protection solutions, and that addressed to the small medium businesses. Yeah, just in the past quarters they focused more and more enterprises, so the larger customers. And Crowdstrike actually is doing the complete opposite way. Crowdstrike first went to the enterprises, and now going stronger and setting a higher focus on small medium businesses. But what you need to consider, again one more time, a large chunk of income for SentinelOne is impacted by small and medium businesses, and they are stronger, historically stronger impacted by economical developments. And that is what you need to keep in mind, that the economy is still struggling somehow, interest rates are still quite high, and one more time, the management stated at the last earnings call that it can have, that the overall conditions, the market circumstances is a little bit difficult for them and for the SMB businesses. So might get better in the future, but it's not that surprising, let's say it like this. Okay, however, Top Gun, one more time, mentioned the guidance. It doesn't seem to have had an impact. They should have raised it by at least 10% more, but they didn't. Yeah, okay. I'm not sure if he's understanding it or not, but it's still here. But let's check the experience of El Financiero. You can see I've worked in enterprise software, and the sales cycle isn't 1 month for a company to switch over. Even if the phone is ringing off the hook, it's a good sign, but not all those calls turn into sales in one conversation. Raising guidance is only when those customers have signed the contract. From the first conversation to signed contract can take months depending on the company. This isn't you or I going into Best Buy and buying a new cyber software for our laptops. And that's completely true. Keep this in mind. That's completely true actually. I personally have as well some sales experience, and I don't want to go into too much detail about my professional life, let's say it like this, at least right now. But I can definitely underline the feedback of El Financiero and of Medicine 100%. It's completely reasonable. Then we have more feedback by Stock Scanner, and he's telling constant losses. Management seems completely delusional. No benefit from crowd problems. Employees will sell you all the shares you want from the generous stock compensation. Yeah, and he's right. That the stock compensation, I share the opinion. It's definitely generous. So very, very strong one, and very huge, actually too huge. But again, you can see it here. It will be the same reaction. Really, the Crowdstrike value was in July. This is the second quarter report. Guidance for year could have had a bump through it, and it didn't. Better have good reasoning on the call. Yeah, but at least it's same topic like before. Really, I mean, people who are writing this kind of stuff, like Stock Scanner or Top Gun 2, I don't want to be too rude, too toxic or whatsoever. That's not my attitude here, or at least I don't want to push this out right now too strongly. But people who are writing that's weak, the results are weak of SentinelOne of Q2 because they didn't participate of this outage of Crowdstrike. That's almost funny, let's say it like this. I can't take it serious. I can't take it serious at all. I mean, then you really think, okay, people holding short positions. That can be the only reason. Okay, however, this guy is writing no revision on revenue guidance. It's constructive, but no reacceleration. Yeah, okay. This has a history of tanking on earnings report. Let's see how it goes. Listen to the call now. Yeah, call can have a big impact. Understand this. And let's check out. There are 3 more comments. That's nonsense. We have here shareholder letter pretty much slams Crowdstrike. Without saying Crowdstrike, guess we learn about them tomorrow. I own both. Okay. So I mean, when we take a look at the shareholder letter, we just covered now the major KPIs. But of course, they're stating a lot of information already now, what they will talk about in the later call or in the ongoing call right now. You can see some Sentinel research highlights. I mean, yes, they increased their research and development costs. So maybe here will be some interesting highlights. You can see SENTINELONE purple, so the AI business. Maybe some interesting stuff we didn't cover right now. We need more time to cover this and one more time. And I guess in October I will cover all of those information in my earnings roundup, where I invest a little bit more time into the results. They have as well a new go-to-market strategy. So in the past they didn't like this platform business with different modules like Crowdstrike is doing it, but now they have as well a larger portfolio of different solutions. One more time: endpoint protection, identity management protection, security, and KNAPP solutions, AI, this kind of stuff, big data processing. So they have as well this platform business right now, and a new go-to-market approach. They have a new CRO who's taking care of this this procedure, and we will see as well maybe some impact on it. And actually, guys, just because we are going one more time through it right now through this shareholder letter, I am missing this retention rate, net retention rate. That is what they're not covering since last quarter anymore. So basically, how satisfied the customers are. Let's say the customers purchased products for $100 in 2023. How much they invest or how much they purchase in 2024. If it's $110 for instance, then they have a net retention rate of 110%, which is good. So the same customer is investing or spending more money than before, and we want to see it's growing. However, they're not stating it anymore. Let's see if it's existing somewhere in retention and expansion. Maybe they're covering it at call, but I don't like anymore that they're not focusing it. Yeah, so it was more than 120% in the past. Last quarter it was something I think between 110 and 115% based on the call information, but that is something as well not that convincing. However, let's go back. And here Irene Kat is pushing a statement: release second quarter fiscal 2025 financial results that slightly beat expectation, and it's also increased its full year 2025 revenue forecast today, as still struggles to be positive, but ended today with 0.56% minus. Disappointed but long on S. Look, I understand this guy, yeah, but one more time, I mean, the guidance looks good from my perspective. Again, one more time, maybe they're sandbagging, maybe they're not sure if they really develop positive. They develop on the Crowdstrike outage, but even if that's not the case, just compare the valuation in terms of EV and sales. And yes, that's not everything, but just based on EV sales, a crowd to S, and you will see, or to other vendors, and you will see that S, even though it's covering all this strong businesses with strong CAGRs, strong compound annual growth rates in the future, it's still priced comparatively cheap, not for perfection. And so that is what I guess you need to consider as well as a shareholder. And yeah, so for me, even though it was a neutral result, neutral means for me it's good. I will stick to be invested in the company. My dog here still sleeping, that's good as well, I guess. But I guess it's okay as well, or even a little bit more appropriate to switch off the stream soon so I can sleep a little bit better. However, let me quickly check if someone is still live here in the stream. And yes, there is still one active viewer. Thank you very much for staying loyal right here, and as well leaving a like. I highly appreciate this. I mean, it's quite late. Took the call is live, the stream is live for more than 2 hours right now, and the call of the management of SENTINELONE is already live, so I can understand that everyone who's switching as soon as the call is live from SENTINELONE management, the earnings call, switching from my stream to this call is just very, very reasonable. So I'm very happy that at least one stayed here at the chat. Well, I hope you are satisfied with the information I covered today. And if that's the case, look guys, let me check this one more time. Then please feel free to like the stream and subscribe to my YouTube channel. And of course, you can follow me on my other social media accounts like X, Instagram and Reddit. You can see it here and everywhere stated the same or called the same, like a sense of capital. And so I would highly appreciate if you follow me. I'm always sharing if I'm the information of purchasing new shares or selling some positions. You are always the first one to get this information if you follow me on the social media channels. And of course, in the future, I will share more and more opinions about news, for instance, right on time, not just through my stock news episodes. However, guys, one more time, I'm quite satisfied with the results, even though it's not a big jump, big step into the future. I guess there will not result so much volatility out of these results, but that's okay for me. I stay invested, and I'm still a satisfied investor of SENTINELONE. Guys, thank you very much for joining. Thank you very much for staying patient. I hope you liked it. And as always, one more time, that was no financial consultation, advice whatsoever, no guarantee for the correctness of the provided data. So make always sure that you handle your own money with a lot of research work and everything. And you create your own opinion. You're not sticking too much on mine, for instance, just entertainment. And last but not least, most important, worth more than money, of course, is health, staying healthy. So guys, take care of yourself. Most important, money is not worth anything if you're not healthy, I guess. And yeah, enjoy your life, of course. Enjoy your life. Hope to see you next time. I guess next time will be earnings roundup episodes of Alphen, of New, and of StoneCo and of SENTINELONE in October, very likely, and of course some new stock news episodes in the future. To not miss any updates of the shareholders you are the stocks and companies you are most convinced. So make sure you stick close to the channel. Much love, all the best, take care of yourself, bye bye. A sense of capital.